Right. Hello, everybody. Good evening. Let me just get this working. Good evening. Right. Arun Mera here. And tonight, I'm going to be talking about the budget. Okay. And so before I crack on, I will keep it relatively short and sweet. I appreciate it's at 8 o'clock on a Wednesday evening, and it's not the most interesting, exciting subject to cover. Tonight, you might hear dogs and you might hear children running around the house, so I apologise in advance for that. But I suppose the budget has come at a time when there's a lot of change happening across the UK. Economic times are changing, and it's worthwhile just having a little insight to what was announced today. Now, truth be told, there wasn't that much new stuff that was released, which we weren't aware of, particularly from an accountant's and tax perspective. But I'll recap what was announced, and then I'll also remind people of what was announced previously as well in the March budget, which I think is probably more relevant to a lot more people on this webinar tonight. Now, we've got attendees all over the country listening in. I know a lot of people who cannot attend it tonight whilst recordings for this, so there will be a recording available of this to share to download and watch on YouTube later on. But let me crack on. So let me try and find my slides. Bear with me a second. Actually, before I do that, I did have a poll. Actually, I'm going to do a poll quickly. So I just wanted to ask one question here, and if you can answer these questions, at least we get an idea. So the question is, what's the biggest issue in your practice over the next 12 months? So I'm going to launch that. So if you could answer that whilst I get myself organized for slides, hopefully we can get this working. About half of you have done it. If anyone else can participate, that'd be really helpful. Okay, let me get my slides. Where did they go? Okay, let me end that poll. So we're saying, okay, well, overwhelmingly it's two areas. Well, it's the top three that really count here. 43% for lack of manpower, 43% for rising costs, and 14% for rising taxes. The rest score 0. So that's an interesting angle to see. So it is the rising costs, and it is also a manpower issue, which we're aware of in the dental sector as well. So without further ado, let me end that now. Let me close that down. Share my screen. Okay. Hopefully you can see this. Can I make this slightly bigger? Okay, right. So budget update, 27th of October. So for those of you that are new to any webinars that I've done, I haven't done so many lately, primarily because I've been so busy with dealing with work and clients, and our team has been getting bigger and bigger. But over the period of the COVID and prior to that, we pretty much do a couple of webinars a month. But watch this space, there are more and more webinars coming about. So my background, I'm the owner and CEO of Samera Business Advisors. We are chartered accountants, we are commercial finance brokers, we are practice sales agents, and we're also run a very, very fast growing, rapidly growing actually, dental buying group, which we've launched just over 3 months ago, and doing very well, which I'll tell you a little bit about that later. I also own the Dentistry Dental Group, which is based down in London, in Surrey, which is run by my wife, who's a dentist. Been working with dentists actually for 18 years now. She's got 17. I'm a trained chartered accountant with PwC, and I used to work in banking as well. So I've got a lot of kind of financial experience, and I'd say finance and financial related activities is certainly an area I know well, but how to apply it commercially is probably my strength as well. So in the budget today, some of the key stats. This is what Rishi Sunak announced. Inflation in September was 3.1, and it's likely to rise to an average of 4% over next year. So we're seeing costs rise, okay? They're expecting the economy's forecast to return to pre-COVID levels by 2022. Hopefully that will be the case, but time will tell. And they're expecting a growth rebound of 6.5% this year, followed by 6% next year. Lower unemployment expectations, which I suppose is good, and that's going to peak at around 5.2 next year, a lot lower than what they predicted. And as we can see also here, wages have grown in real terms by 3.4% since February 2020. So that's the impact of inflation, wage rises. Borrowing as a percentage of GDP is forecast to fall from 7.9 to 3.3% next year. And borrowing as a percentage of GDP will then fall in the following 4 years to about 1.5%. So the underlying theme here is inflation. We're seeing it from energy prices, fuel, literally building materials, you name it, it's happening. I've got a client who's doing a dental practice build, and their costs seem to be ramping up every week, primarily because of material costs are going out from cement to bricks to dental equipment, you name it. So things are rising, okay? So as a business owner, we have to try and manage that and deal with that situation. So how do we do that? So what can you do at this stage in an inflationary economy is ultimately you need to review your costs in your practice and also review your prices, because if your costs are rising, your margin is going to get squeezed if you keep your prices the same. So you're going to have to keep your prices moving up, as long as that doesn't impact demand at the top level as well. So first thing, review your costs, okay? And in terms of costs, it's always good to shop around, seek alternatives to suppliers, or join a buying group, which I'll mention later, something that we're doing. And in terms of pricing, though, you need to look at where you can raise prices and services you offer to, so that they may not be demand sensitive. So I know we did very recently a client of ours where we were helping them increase their prices for their practice, increasing the fees in their practice. And we looked at what are the things that you could actually tweak and increase by, let's say 10%, which wouldn't really have any impact on the patient paying for it. And an example there could be the panel or x-rays. You take probably thousands in each practice every year. If you put that up by £1 or £2 each, people won't notice it too much, but it will have a significant impact on the bottom line. So it's things like that. You've got to start thinking, how can I increase my prices? Which items can I increase? Where it might not be seen that much, but if there's a volume of it, it could ultimately grow the business as well. So inflation is here. These are some just very initial basic tips I've outlined at the moment. Then also today, he announced there is going to be some type of change in business rates. What exactly that will be, who knows, okay? There've been talk about this for a while, but he did announce a 50% rates deduction, or this discount, for the retail, hospitality and leisure sectors, okay? Obviously nothing for the medical or healthcare sectors. He's consulting on an online sales tax. But I suppose the big news that was announced actually before the actual budget was even announced was there's a national living wage will increase by 6.6% to £9.50 an hour from £8.91 from April 22. So if you've got people on minimum national living wage at the moment in your business, and they're over 23, I think it is, you're going to have to increase that to £9.50 from April. In addition, which was announced back in September, we also know that national insurance is going to be rising. So that's going to rise from 12% to 13.5% from April 2022. So we're starting to see this impact us in various ways. This 1.25% increase will impact literally everybody. The living wage will impact people who are employing people who are on national living wage. However, there will also be demands from your employees, staff members, because they have to think, well, my mortgage cost may be going up if interest rates go up, but my cost of living is going up. I'm having to, when I go to the Sainsbury's or Tesco, my shop is more expensive, but I don't have enough money to buy it. So they'll be asking for wages. So it all kind of links up together. So it's a cocktail out there. And when I say a cocktail, it's a real mix, okay? And we've just got to get these things balanced right and managed right to ultimately, hopefully, do okay during these next few years, which I think will be quite inflationary. Now, not announced in this budget, but I thought I'd go back to this and just briefly mention it. But last budget was announced, and Rishi Sunak did actually mention it briefly in today's budget, was that there are corporation tax rates will be increasing from April 23. He'll protect small businesses by creating a small profits rate, and this will apply to all companies, although those under 50k per annum will still pay 19%, and those between 50 and 250 will have a tapered increase. It's forecast that a full rate of 25% will only affect 10% of companies, allegedly. Okay, but this is something that's happening, that's been announced previously, and so corporation tax rates will go up from 19 to 25% by April 23. In addition, which was announced back last year, or back last March, for periods from April 20 to March 22, there's an increased amount available for 3 years carryback of corporation tax losses. So this ultimately enables companies to offset some of their losses from COVID disruptions against prior year profits to generate additional cash in the business. So you want to use these losses in this period. If there are losses, carry them back, and you may actually be due a tax rebate. And this is one thing that, again, was alluded to in the budget today. And I think many people haven't really been listening or taking advantage of this. When I've talked to people, they're not aware of this, but it's this super tax deduction, which again was announced in March, not this time around. And it's from April 1st, 21 to 31st of March, 23. Companies, not sole traders or partnerships, but companies investing in qualifying in new plant and machinery will be able to claim 130% deduction for qualifying plant and machinery purchases. So effectively, if you're paying £100 or something, you can get £130 deduction on that through your taxes in your company. Something not to be sniffed at. So if you're planning to invest in equipment, planning to buy, kit out a new surgery, planning to start up a surgery, okay, or start up a practice, this is a window of opportunity that is really, really advantageous for you to do this. And I would suggest strongly that you do this, not in this period, not wait until that period, or commit to this equipment now, because I think this opportunity won't be here for long. It's not here for long. We know that already. So in summary, in a limited company, the time to invest is up until April 23. So if you trade in a company, you need to start buying your dental assets now. But at the same time, you don't want to buy any type of thing. You want to make sure you're buying the right assets for your practice on good terms at the right price. Okay, and I'll put in brackets buying group again, which I'll talk a little bit about later. So you've got to think, okay, in this inflationary environment, you want to try and manage your taxes. So you need to think, okay, if I can reduce my tax bill by committing to equipment, I can then bring my tax bill down. Okay, of course, you're going to have to pay for that equipment. I'm not disputing that, but it's a good time if costs are rising, and I think dental assets or cost of dental price of equipment will probably rise as we see it, because a lot of it comes from overseas, so there's shipping issues. There's no doubt that will be more expensive, but if you can get the tax benefit, it's still worth doing now, in my opinion. So really, really important. And you also need to make sure when you're buying these assets or acquiring these assets, you get the finance that's right there as well. So again, we can help you with that. One thing that was mooted in the last budget, and it was mooted in this budget, was whether going to be a change in capital gains tax, but nothing was announced. So that was that. And then in addition, I know there was some talk in the dental press that they wanted the Chancellor to talk about dentistry and make sure there's sufficient funding for NHS, but there's nothing. I looked at the 110-page budget document, couldn't find anything myself unless I didn't read it. I had to read it very quickly, but if I missed it, apologies, but I couldn't see anything any specific allocations or funds for dental. So who knows what's going to happen next with NHS dentistry, but that's another story for another day. My outlook over 2022 and 2023-24, I think inflation will dictate much of what happens, and this will be for a while. The only way really that a Bank of England has the opportunity to control inflation is to raise interest rates to try and temper inflation. So the cost of borrowing rises, so people ultimately have less money to go and buy things, okay, which ultimately brings inflation down. So let's see if that happens. It could be a good time to fix your interest rates. If interest rates are going to rise, or refinance out of an existing deal. And again, so that's something we can definitely help with. And I think 2022, no doubt, will be an expensive year for dentists with rising taxes and the impact of inflation. But to counter that, I'd suggest if you're going to have to upgrade your practice or set up a practice, all these sort of things, if you're in a company, this is a period of window. 2022, that window of opportunity to actually commit and buy that type of equipment, okay? Because it will have a positive impact on reducing your tax liability. So I didn't tell you it's going to be short. It's only 15 minutes, okay? How we can help, and I actually, before I talk about that, there wasn't much else in the budget. Obviously, there's other things about alcohol duties and air taxes and tonnage taxes, but I don't think it's really relevant to what we're talking about today. I think where we can certainly help and add value to your business is certainly on three main areas, which we're really focusing on at the moment. Our accountancy and tax team are growing because we're dealing with more and more accountancy and tax clients dotted around all across the UK. Excuse me. So if you need accountancy and tax advice, restructuring, corporate tax, tax planning, you name it, we can do it. If you're thinking of raising finance for acquisitions, or you want to buy those assets through to benefit from the super tax deduction, excuse me, we can certainly help you do that. We can certainly help you finance those. And then in addition, I did mention it earlier, is our buying group. And this is something we only launched about 3.5 months back, and it's growing like that. And in essence, it's a buying group where we are negotiating on behalf, since we've got economies of scale, we can negotiate terms with suppliers on much better deals for whether it's consumables, equipment, and other items. And we're only at the beginning of our journey with this, really. And we're seeing that in a space of 3.5 months that there is huge demand. And I think going into the kind of 2022, when people want to keep their costs as low as possible, being part of the buying group is hugely advantageous. So let me just quickly link you to this. Okay. You can see the page here. Sorry. I'm going to share this in chat to you. I'll just share this page. So you can see, you can watch a video with me talking there. Gurpreet is our buying group manager, so you can arrange a call. It's actually free for all our accountancy clients and any startups. So you've got nothing to lose, really. Okay. If you want to join, if you're not an accountancy client, you can still join. It's £50 a month if you pay annually, or £60 a month if you pay monthly. It's literally, and as an added incentive, it's actually 3 months. It's totally free, and if after 3 months you don't find you're saving any money, you can cancel it. There's no obligation to stay in at all. So you can certainly save money. We've partnered with DD in this aspect, but we've got other suppliers and other products and other things coming on board as we speak. We do various webinars, we review your costs, you name it, we do it. So we're saving people money, because I think that's what really people want to be doing over the next 12 months and beyond. Let me go back to my slides. Hopefully you can see this. So just bear with me a second. I've just spoken about this and realized you want to see this. So this is, Gurpreet's our guy. And as you can see here, we've got some deals available at the moment. We can't actually, I think my website's not working. My computer's not showing this properly. The cache is not there, but you've got chairs, NSK, iCloud, various things. Okay, so check it out. If you're thinking about wanting to save money, check us out. You've got no obligation, and I think it's a bit of a no-brainer. Okay, so let's go back to the slides. Right. If you want to also just arrange a chat or a call with me, happy to do that, or my team. I'll show you another share. I'm going to share my team details. If you go here, contact us, you can literally contact us in so many ways, but I think the most popular way is ultimately by a virtual consult. You can talk to myself, Nigel on finance, Dan on finance, Jyoti on starting up, Gurpreet on saving money, or the buying group ultimately. So you've got no excuse. Okay, we can certainly help you there. And then lastly, let me share out. It takes so long just to switch between slides. So if you look at the future, I think the government ultimately needs to recover what has been spent. The tax environment is going to get more complex, although not much was announced tax-wise this time around. I think a lot was announced last year, and then the national insurance charge increased, the national minimum living wage was increased. There wasn't much announcement of how they're going to repay all their debt though at this stage. Okay, so and Rishi Sunak's trying to allude, say he wants to reduce taxes, but it's in the next by the end of his term. But I'm not too sure if he will ever get to do that. Ultimately, HMRC want every penny, and the key is to keep your finances well organized. And if you think we can help you, whether it's saving money, saving tax, getting your accounts done, raising money, we have the team most definitely that can help you. Okay, so 20 minutes tonight, kept it short and sweet. In terms of any questions that anyone may have, feel free to send me a message, send me an email. I'll be delighted to help, and we can go from there. Okay, all right. Thanks very much. Have a lovely evening.